All right, thanks everybody for joining the session here, funding the next top grossing gaming company. We have a very interesting mix of investors based in the UK, Israel, and the US. We have a mix of early stage, mid stage, as well as financial and strategic investors, so should be interesting. Maybe before we start, can maybe everybody introduce himself quickly and give a quick background on the firm?
Jon Goldman, I'm at Greycroft. We are a broad-based investor in mostly mobile and still online technologies. We've got about $1.5 billion under management. We invest at every stage from seed through growth. I, in particular, focus on gaming at the seed stage, but I'm more broadly active in entertainment in general. I've most recently invested in a podcast company. And then, in addition, I'm also active in the entertainment industry in Hollywood, and I'm a partner in an entertainment firm.
I'm Eric Rabs. I manage corporate development and investments at Playtika. I joined Playtika in 2016. I was with the former owner. And when we sold the business to our current ownership group, which is a Chinese consortium, we sold it for $4.4 billion. I joined and relocated to Tel Aviv. We are if you're not familiar with Playtika, we're the market leader in casino-themed games. And very recently, we've been aggressively expanding into casual games. So in the last 16 months, we did 3 acquisitions. We bought Jelly Button, Wooga, and last week we announced Super Treat. So that's on the corporate side. On the investment side, our investment business is called Playtika Growth, or PGI. It's a $400 million fund, and it targets mid and later stage consumer internet companies, both games and non-games. And the whole sort of value add there is that we leverage our operational expertise in marketing, analytics, monetization to really drive performance at the portfolio level.
Alvaro Alvarez, I'm with Initial Capital. We're a London and San Francisco based seed stage fund focused on consumer internet and particularly games. Our team has a background as entrepreneurs behind companies like Glue Mobile and Playfish, and as investors behind companies like Supercell and SpaceApe.
I'm David Gardner with LVP. We are ex-games industry people who realized the funding was messed up, so we thought there's a big gap in the market to put people who understand games with people who are understanding money and bridge the gap with that. So we've made about 30 investments across our 2 funds. We've invested a lot with the initial guys in people like Playfish and Supercell. We've got some recent investments, an ex-Riot team called Knock Knock working on instant messenger games. As I say, 30 investments, mainly in Europe. That's our focus. That's where we're based here in London. But we've also been doing more and more in the US, but really nothing outside of Western markets, because Asia is a very special place, as you'll know.
Awesome. Thank you all for joining. What are the ingredients of a top grossing or future top grossing gaming company? And when investing in one, what's important to you, either gaming company or gaming related company or team?
Well, I'm happy to start. I guess without being too quippish with big revenue is the top grossing. I would say that it is a lot about the team. I saw the presentation earlier from Atomico, and really at the end of the day, I mean, there are, of course, metrics are important, et cetera, but that comes after the team is successful. So we've made investments where we thought, oh, that game was great. And then we've realized we weren't that great at picking what people like to play these days. So that's something of a random piece. But I think the team is something that can be heavily evaluated. So teams have to pivot, teams have to learn, teams have to adapt. We're very keen to make sure the team is skilled, works well, deals with facts, and can execute at a market appropriate speed, depending on what they're building. And it's one speed if you're doing hyper casual, and it's a different speed if you're doing a deeper, richer MMO. But I would say that's the first filter.
I would say increasingly, I'm, of course you want a great team. Increasingly, I'm really trying to drill in on business design versus product design. A lot of teams are very passionate about their games in the industry, and that's great, but it's important to think through how you're going to make money and who on your team has actually got that experience, because it is a much more competitive space, particularly in mobile, and figuring out how the features in your game tie to how you're actually going to be successful as a business is important to figure out sooner rather than later.
I would say for us, what we look for in a gaming-related investment isn't necessarily the top ingredients or the main ingredients in what will be a future top-grossing game, which sounds a little strange. But the reason why we think that way is because we're positioned as a strategic investor. So to answer the question, what are some of those ingredients? Obviously retention is critical. You need both short-term and long-term retention to really assess the viability of a product. We also need to know how to monetize, how to acquire users, how to understand data, how to optimize. And it's been our experiences that very few companies, let alone startups, really have all of those ingredients. So rather than trying to find someone, because it really doesn't exist, that has everything, what we look for are companies that have some of those ingredients, do it really well, and then we could complement them. And of course, this is unique for us as opposed to some of the other more financial-oriented investors. And then we'll complement them. So we'll find a team that really understands how to build well-retaining products. They're super creative, but they don't know how to do monetization, or they don't know how to acquire users, and we'll help in that sense.
Yeah, I'll just make a point of the actual creative process, because obviously team is the key, and the earlier you go in the process, the more important the team is. Process is extremely important, and gaming is a very data-driven business in itself. At the end of the day, you need that third element, which is the creativity to, as Alexis mentioned earlier in the previous talk, not to copy others and to be able to kind of create your own destiny as a games company.
Cool. What advice would you give a girl that maybe has not had a major exit yet, so not a great track record, who's currently raising a round for his firm, as also the universe of VCs investing in the space declined quite a bit over the last years? So like one or two things of advice you would give him or her?
Well, for me, I don't know if this necessarily applies uniquely to entrepreneurs who have failed. I think that's really a case-by-case kind of basis, and I would need to know their background. But I think the advice I would give more generally is that I would recommend being very mindful of the business and financial implications of your strategy and decision-making, but very importantly, to communicate that when you're pitching to investors. So I think showing that you can think through how you're going to scale the business, how it will operate at scale, what the impact of decision XYZ will be on your margin profile or your cash flows. It really instills a lot of confidence in investors. And I would say, I'm assuming that this is a little bit more of an investor or finance-oriented track, but to the extent there's any games people in here, obviously this is a super creative industry. So not all CEOs are sophisticated in that domain. I would not be alarmed by that. What I would recommend, though, is that you surround yourself with members who are, and show to investors that you value that thinking, rather than necessarily trying to mold yourself into a finance guy if you're not.
Yeah, I would say resilience is key. Every single company that I know has gone through ups and downs and good and bad times, and some of the most successful companies in the sector you can think of today did go through those times as well, and the future was not as bright as it may be today. And so, maybe you take 100 meetings and nothing happens, and then all of a sudden someone understands what you're doing, someone has a good personal connection with you, or you just learn through the previous 100 meetings what it is that people want to hear.
Yeah, I was going to say, I was reflecting on the question. It's a very noisy, very competitive space. If you don't have something to differentiate yourself, it's going to be unlikely that someone's going to take a bet on this risk. So you have to figure out what that's going to be. It doesn't have to be an exit. It doesn't have to necessarily I built and successfully exited a previous company. It could be I worked at this business, I created this creative success, or I've had 100 battles that I've learned from, and here's what I've learned, or an impressive semblance of a team or a thoughtful strategy. It's incredible how much junk comes through. I mean, it really, yeah, it's staggering, but people have to understand getting through the financing hurdle is just step one. Then you have to get through the consumer noise hurdle.
Yeah.
So if you can't kind of do the first, then anyways. So I just think trying to think, how do I stand out and do something to attract attention with the investors as well.
I think there are three things that occur to me. So in sort of a broad-based firm like ours, we probably looked at over 3,000 deals last year. And what a lot of entrepreneurs don't take into consideration is just there's actually a huge desire to say no just to clear off your desk. You're just trying to drill down to something that's time efficient. And as a result, so point two is I think a personal introduction is really important. So like cold calling people is not a great idea because there are dockets with introductions. And then probably the most important thing I've noticed is that when you face objection, a lot of entrepreneurs spend a lot of time trying to rebut, and I think the real talent is trying to find investors that share your hypothesis as opposed to trying to convert people who put up objectives. I don't know if you feel this way. In my experience, investors are abstract, conceptual people, so many start with a hypothesis, and then within the game space, we have creative passion, so we might be attracted to a particular thing, but you should also, as entrepreneurs, learn to say no really quickly. When you see somebody who doesn't share your hypothesis, quick thank you is nice, but you don't need to write an essay back, rebutting everything. Just go on to the next one until you find, somebody who shares what you want to do.
Great. With the universe of financial investors somewhat having decreased over the years, we also saw a lot of strategics investing in companies from early, mid to late stage. When does it make sense to include a strategic investor? And if you do, what should you be cautious about?
When you have another choice? No, I think, Eric was speaking earlier about kind of the standards of excellence, whether it's user acquisition or all elements of the business. And I think our advice for teams is that if you're going to significantly accelerate the success of the business by partnering with the right strategic, because they're going to bring a piece of the missing puzzle, then be open to that. And then the gotchas, the things you have to be careful of is, do they exhibit any particular, or do they have any particular hooks or extra control or exit, and go in always with money that's looking for the highest return that can help neutralize that. So if you only take money from a strategic, it's the joke I heard at last year's GDC was, oh, those guys, they've licked every cookie. If the strategic investor goes in and licks your cookie, no one else wants it. So you've kind of pre-sold at an early stage, and unless that's your desired exit. And there are a lot of companies whose dream it is to be bought by a particular strategic, and maybe that is the best thing. I've certainly advised people, actually, I can see you're in love with that as your exit. Don't bother if they're offering you money, just go that way now.
Right.
So that would be what I'd say.
I think that last point is very important because it actually comes down to the entrepreneur's desire. It's a long road. It's going to take a number of years to, if you're lucky and the stars align, build a big company. You need to decide not only strategic investors, but who is going to be with you along the way. And obviously David mentioned it, but to me, as a non-strategic investor, as a financial investor, the way I treat a strategic investor is the same way I treat another financial investor, which is what are the terms, what is the intention, what is the personal fit, and are you as an entrepreneur comfortable that this person is going to kind of handhold you for the next few years?
Yeah, I think probably people think I'm a little biased here, but I think I have a pretty objective answer, which is, it really depends on the nature of the business and the investment. So, if I'll give you an example. Not all situations are problematic. If you're a B2B oriented, this is a problematic situation. So let's say you're a B2B oriented business and you have a strategic on and you're trying to sell your product to competitors of theirs and they're getting in the way, yeah, don't go with them. That's a terrible idea. Or if you think that there's a piece of technology that they're really trying to get you to focus on and pursue that route and it's not in the best interest of the business, don't go with them. I think generally what mitigates that is if your strategic investor is financially oriented. So if you look at Playtika, those who are will probably know this, we're only financially motivated. So yes, we're strategic in the sense that we bring operational value to you guys. We're not trying to invest in something like the way Intel would to get an upper hand in some chip or whatever. We want to make money. And so, so for us, my view is always, as long as your interests are aligned with the strategic, as long as they're bringing real operational value, and as long as they have no rights or anything of that sort that would prevent you from exiting at the highest possible valuation, then to me there's no reason not to accept a strategic investor either later on or at the earlier stages.
So definitely agree with all that. I think that kind of dovetails with your last question. For early entrepreneurs, pricing is a really tricky issue, and people don't realize until it's too late that you can price yourself into a wall, and we saw that a lot with VR companies. And one of the challenges that can happen with the strategic, and I completely agree that it's a huge value add, is that let's say your strategic partner is a public company in some place, and they structure a deal which is investment in your company but JV with something they're doing maybe in their country. And so they may sort of concede to high valuation company because they really value the deal for the joint venture and the money that can contribute to their market capitalization, either US, Europe, or somewhere else. And you can end up hitting a wall if you're out of, if that's not the last money you need in your company. If you need to get another round in the future, you want to make sure that your round is typically set by a financial investor or a strategic that uses financial investment metrics, because the worst thing is to accelerate through that curve. You need some money and people won't look at your round because you're priced stupidly, and meanwhile your strategic partner has gotten sort of the value it needs in its home market. So just something to consider, but in general, very valuable.
There's one other thing that I would add, which is sort of a tip that I think investors are a little scared of to do sometimes, and I would encourage you to do it. And maybe that's because I'm Israeli now, and there's a much more aggressive chutzpah approach.
Are you a citizen?
I'm officially a citizen, yes.
I worked with Jerusalem Venture Partners for 4 years.
They're awesome. So I would recommend this. I'll be in a meeting, I'll give the spiel I just gave, and maybe some people buy it and maybe some people don't. At the end of the day, ask me what my incentives are. How am I getting compensated? If I'm getting compensated by this exit, I'm aligned with you. I want you guys to sell for the most. If I'm not, there's an ulterior motive at play. And I would honestly recommend all of you be upfront with your investors, because it's a long path with them. You guys need to know your interests are aligned. Don't be scared about that, if you are.
Okay, that's great advice. Are there any truly game-changing innovations you're seeing in the segment, or anything you're super excited about that's new?
I think it's a mixture of a lot of things. Right now, I think we're in a zone where innovations in the business model and the thinking about widening the demographics, so more games for girls, more kinds of play styles for gamers that are less hardcore. Something like Fortnite, which has done so incredibly well, feels like it's just done an excellent job at a number of different things, rather than, it's obviously not a big platform breakthrough. It's just all across all platforms. It's a kind of a business model breakthrough on PC, but then it was also on mobile. So it's just well executed on many different levels, and I think we're definitely in a place where, because the market has so many consumers, things could become breakout if they execute those things really well. We've all been disappointed with VR. We've all been, I think, we'll soon be disappointed with AR, if we're not already disappointed with AR. Crypto finally looks like it's a black mark rather than an exciting next front. So I think the obvious choices have been currently discredited, but yeah, so that's my current view.
I agree with that. I think that, I mean, breakthrough is a very strong word. I think what we are experiencing as the market is more mature is a convergence of different parts of the entertainment industry that games are being able to leverage. And those that incorporate those into their own business model and manage to make the most of them are the ones that are at the moment breaking out of the pack.
I don't think there's something that's such an innovation, I would say, but something that could be a profound change to the industry would be the changing economics of the industry, particularly and if the platforms lower prices. I think that's a super interesting thing because I think there's been a lot of talk about that. There's a lot of pressure being put on by Discord and Epic and Netflix. And I think people or the industry, I should say, is looking at it a little bit too simplistically. So everyone's sort of assuming, okay, well, we're going to lower prices for argument's sake, let's just say 30 to 20%. Well, what's really going to happen? Is everyone just going to make 33% more and that cash is going to sit on their balance sheet? No, but I feel like that's sort of what the industry thinks. People are going to take that money and they're going to go spend it in user acquisition. CPIs are going to get higher for everyone. Or some people may say, you know what? I'm going to double down on content and make super high production value games. And that's going to set a new bar for everyone to compete in. So for me, if this even does happen, which I don't think it will, but if it does, I'm sort of curious and interested to see what those unintended or unforeseen effects will be.
So there are a couple of things I'm excited about. One of the things I love about Fortnite is that it's monetized so well, yet it doesn't really have a paywall. And I've said for a long time, you know, putting on my entertainment hat, is that you can't really entertain people fully if your business model is irritating them to pay. You have to get people to pay for pure entertainment. And I think that's really proven that. And the other thing that I'm excited about is the bleeding of models. So free-to-play is going upstream to more core games. And then I think there's now excitement again about subscription and premium business models sort of migrating down to mobile. So just in terms of the vibrancy of, of gaming models and play patterns, I think that's great. And then, I mean, I don't know if this got attention over here. I guess this would be a third point, but you know, Netflix just did an interactive TV show that nowhere near as good as what we do in the games industry, but got quite a bit of, viewership. And so I think there's yet another group of players who are going to be funding and distributing games, which is very exciting for game makers.
Very cool. So, like 2 years ago, two or 3 years ago, was all about mobile, and PC was kind of, from new investment point of view, almost a bad word. It seems the interest in PC came back quite a bit. Mobile, a lot of people realized it became more challenging. Now with Fortnite, we see truly cross-platform. Is that something you're looking at? Do you think we're going to see more and more companies that have the games truly cross-platform, being on mobile, PC, and console, and you can play on different entities at the same time?
I think there are, I think it does depend on the game and the players. I think what we're seeing is two types of very clearly differentiated players. They're interested in different types of content. More and more, the casual players, those that priced content, are going hyper casual, and the span of attention is lowering even more. And then you've got the hardcore players that are looking for a meaningful experience. And I think that port from PC over to mobile on the hardcore side never truly happened. What happened was that everybody was playing on mobile, the world is more and more mobile, and some players were looking at mobile as an alternative second type screen for them. And I think what this opens up is a universe for those players to kind of go back where they belong and at the same time play on different platforms. But I don't think it applies to every single type of game.
I think that's probably right. Sometimes when we think it's a really crazy day and we're trying to figure out what the future is, the concept of everything being cloud rendered and then displayed on whatever portal device you have, whether it's a mobile device or a PC, and being able to kind of merge between watching the influencer play and entertain in the game seamlessly. And there is this kind of, and maybe we will all be wired with virtual devices so that you can kind of mix reality instantaneously. I can see this kind of ability to kind of lean forward and be active in play and then decide, oh, I'm tired, I'm going to take a break, and lean back and just kind of be entertained. So it is interesting to see how those things might play out over much longer time horizons than anyone would probably forecast. But I think there's still a lot of cool stuff coming.
Great. We haven't talked about esports yet. Looking back 2 years ago, I guess VR and AR was still super hot. Esports was very hot. It seems like VR, AR more or less totally collapsed, while esports continue to become more attractive, at least from a funding point of view. If you look in some of those teams now, getting valuations in the hundreds of millions. And at the same time, it seems viewership continued to increase. What's your outlook on esports? Are there certain things you like and you're excited about?
I mean, I've over time come to sort of view it in two ways. One, I'm an early stage investor with billionaire NFL team owners. And so I think that the nature of the investor really, it's sort of a different analysis for them. So if you look at the major sports, at least in the United States, the young viewership is really declining. So this is chump change for them to, and part of a broader strategy to attract younger people to their franchises. So that makes it, in many cases, economically unviable for me. But two is I've looked at sort of the different team investments and so forth in sort of the ecosystem bets, and I have a few of them. I've got some training investments in this or that. It comes back to me that the money is in the game. Like that is sort of the pinnacle and where all the returns are. And I guess as a side corollary, I've already got a 19 and a 24-year-old child. The idea of managing a team of my daughters of 24-year-olds, that would drive me nuts.
Yeah, I can see that.
I share the same view, not on the daughter's part. I don't have any. But look, this is a really difficult business if you're not a publisher. I think people need to stop thinking about esports as anything other than the byproduct of it. So if you're trying to get into esports and you're a gaming-oriented business, focus on your game. Build an amazing game, get a ton of users, get passionate users. Maybe something will evolve, but I can tell you what, you'll still have an amazing game. I think all the adjacent sort of business models have proven to be really challenging. And this is something that we sort of looked at. So I mentioned earlier that I was with Caesars Interactive, which was the former owner of Playtika, based in Vegas. So we had different interests, or I shouldn't say interests, but we had different assets to leverage. We could get into it from a digital perspective, or we could just sort of use our premises to host tournaments and do sponsorships, things of that sort. And we looked at this as early as 2014. This thesis has actually been right till now, at least. So if you're Activision, yes, it's amazing. If you're Joe Schmo and really small, don't go try and build the next League of Legends, try and build the next League of Legends, but do it for the game, not for the esports success, I would say.
But I would add the other people making money are the Twitches and the YouTubes.
Yes.
So there's the kind of eyeballs and selling ads using a traditional model. Twitch was a good investment.
Yeah. I mean, but as an investor, you can't predict Twitch from Justin TV. I don't know that I would have invested in Justin TV at the time that it was launched.
Yeah, I mean, I think I really agree with your thesis. I think the problem is where is the money, and when I look at it, it's not likely to be a VC type investor, say, but it would be in some kind of platform or some kind of aggregation. Twitch is looking in the rearview mirror.
Yeah, it's awesome.
Yeah. So.
Yeah, I think pretty much that is the conclusion, that esports is a very big market.
It's great for the. It's great for the
yeah, it's great. It's great for excitement in the
industry.
industry.
Somebody else's money.
Yeah.
So depending on who you are within the esports industry, there are different types of challenges.
Okay, so you all feel confident that next year esports will be still considered as hot as it is now, or Will it
I
go
think
up or down?
I think there will still be money coming into there. It just won't
I
be
think
my money.
Exactly. It's it's definitely the sports teams and media type, looking for, oh my gosh, how do we, these kind of snowflake millennial generation that we don't know how to.
Yeah, we don't understand them.
Yeah.
Let's throw
Let's
some
give
money
them
at
money,
this.
Another thing that's relatively new now, 2 years, is subscription services. So we worked with a company, Fresh Planet, Song Pop, Mobile Trivia, and the subscription revenue increased very significantly over the 2 years because people get additional stuff. What's your view on subscription-based apps or games?
I think it's a great investment opportunity if you can find it. Again, it comes, so on the one hand, mobile free-to-play games is just a huge addressable market. So, you have to look at opportunities there. But you have good engagement, retention. You're hitting the mark in entertainment when people pay you for that entertainment. And certainly the markets value subscription-based businesses like Netflix or, for the longest time, HBO is a huge value driver within the Time Warner empire because of that. So I think it's still hard to get companies of the sort of scale that you can get in mobile free-to-play, but as something that you can build to a certain size and exit, I think it's a great opportunity.
Yeah, I'm bullish on subscription services as well, and I think that the platforms themselves convince themselves that this is part of their revenue going forward. I think the challenge with games is that for the mobile market is already kind of mature, and for too long people have been used to having access to whatever content they want for free, and having a certain type of model which is kind of free to play, and then you spend if you want to without, in the absence of a paywall, if and when you want to. That porting that model over to a subscription model that other spheres of the entertainment industry have experienced at a much earlier stage is a little bit more challenging when people have that mindset. But it is clear that we're moving in that direction. It's just a question of what people are going to pay for, how much they're going to pay for it. But I think that as a business model, it will happen.
I don't have a different view.
I think the only thing I would add to that is that I'm interested to see if it's a model that will work well for mobile game genres that have traditionally monetized via in-app purchase, or if it's better suited to a smaller, more narrow set of apps. And then, there's always a question of, are you capping yourself with subscriptions? I have a unique perspective on this because at Playtika we're very strong at in-app purchases. So I know that on a sample size that's big enough, I will monetize better in the long term off in-app purchases, 100%. So am I leaving money on the table by going down the subscription route? For me, maybe. For others, no. It may be a better, more consistent, steady cash flow stream, and that could suit them. So I think it depends a little bit.
Great. Another platform, instant games, Facebook, seems to be the last year was challenging. At the same time, it's, I can see being a great opportunity, specifically for casual games. What's your view in that?
I think it's definitely, look, in terms of for me, it's a no-brainer for user acquisition. The question is, can it become a platform in its own right and monetization systems that are robust enough in its own right, and where you get quality games going on there, to be decided. I think there is a, if you've watched any Marie Kondo minimize your life things, I'm worried about what's going to happen to the app economy. I think people don't even want to install things, and I kind of hit max apps after so many screens. It's kind of nice to just go to a great website that just kind of handles it. So I wonder if we may find that's a great place to experiment and explore, and then you say, oh, I like that enough to really make that an app on my device. But some companies are out there. We made an investment in a company called Knock Knock. But what I loved about those guys was they were very product focused. They weren't just throwing crap against the wall and see what hits. I'm not excited by that as a games industry person or as an investor. I kind of want a bit more curation and thoughtfulness, and
I think companies who are having success in hyper casual may be better positioned to succeed there just because the games aren't as deep. Like I could tell you for Playtika, maybe Jelly Button could, one of our casual divisions, but like Playtika core business, we couldn't make a successful instant messenger game because it's just not our product expertise. So I think the people who are really strong at the more simplified mechanics may have some success.
Obviously, it's key getting user. What advice would you give companies on the UA side? Traditional UA versus working with influencers, other kind of newer ways.
I think if you are in a free-to-play business, I think it's absolutely essential to have somebody on your team that's expert in that. I mean, a lot of people are going after the same influencers. I mean, to be a successful influencer, you're basically streaming every waking hour. So you don't have a lot of, there's not a lot of mind share to remember all your different promotional opportunities. So I think you have to have that basic skill set in the company. And back to sort of my comment about building a business design before your product design, you need to have your business hypothesis, and then in that business acquisition leader, and the features around that spine.
Yeah, I think just as a small developer, it's only going to get more and more challenging to compete with traditional means of user acquisition. There's consolidation. The big companies have a lot of cash. They've got a lot of data as well from having had games in stores for years. John's comment is absolutely on point about influencers and the type of influencers you work with and how you arrange those campaigns, but something has to happen. You have to do something creative and something different than traditional UA if you're a small developer, because you're not going to manage to scale unless you spend very significant amounts.
Great.
I'm sort of baffled, just to add one thing, I'm sort of baffled that this is still a discussion topic in the industry, honestly. It's like, this industry's been 10 years now. Not to be too discouraging, but like, I won't say if you're not good, if you don't have a plan to do UA at scale, get one, or get out, because you're not gonna compete otherwise. It's like, to me, it's like the most obvious thing. You're gonna open a store, you have no way to get people into the store. Why are you gonna open the store? So it's like, our VP of user acquisition, or Resnitsky's in the audience, he manages a team of many, many millions. It's extremely sophisticated. It's not something that's simple at all, and I feel for the smaller developers, but I would highly recommend that they, to John's point, address this early on. Figure out a business plan to solve this.
Great. Do we still have time for a question for the audience?
One question, if there is one. Anyone? Everybody's really knows that.
They've heard so many VC panels
All right,
so far.
cool. All right, thank you, everybody.
Thank you.